And the stock market, by all measures, is extremely expensive. And it wouldn't take much to cause it to stumble. And foreigners own a ton of U.S. securities. I think we had inflows of $1.5 trillion into from by foreigners into the U.S. stock market. We've just had the largest IPO in history with SpaceX, which is worth $1.5 trillion and is earns no money. So there are all the signs of the latter stages of a mania.
When asked about what the most consequential date in human history is, some might say 1914. If you're in the West anyway, or 1939, of course, the beginning of the First and Second World War. Some might point to 1776, when America declared independence, or even 1066, when the Norman Conquest altered the course of English history. Many would argue for 1929 and the Great Depression, the economic shockwaves resounding globally. But what about 1873, which, as my next guest argues, is the lesser-known financial meltdown in the West? The basis then for the Pulitzer Prize-winning author and financier Liaquat Ahmed's new book, 1873, The First Great Depression and the Making of the Modern World. I'm pleased to say that Liaquat joins us now on Times Radio. Hello to you.
Hello, and thank you for having me on.
Thank you so much for being with us. Let's get straight into it, shall we, Liaquat? Take us to the early 1870s. What happened in the lead up to this?
Well, if you took a picture of the world in 1870, the first transcontinental railroad had just been completed in the US, the Suez Canal had just been completed, and the Trans-India link between Bombay and Calcutta had just been completed. And a French newspaper writes an article saying, you can now cross the world in less than 80 days. Jules Verne, a young French novelist, happens to see the article, and a light bulb goes on in his head, and he says, that would make a great novel. He didn't realize that it would make an even greater film. So he wrote the book Around the World in 80 Days. So the world was in a great position in 1870. It had had a 20-year boom. There was massive infrastructure that had been created around the world thanks to British and French investors. The world was feeling very pleased with itself, not unlike today. Unfortunately, things began to go quickly wrong.
Why and how?
Whenever the world is is sort of congratulating itself and investors are feeling very pleased, they tend to get very complacent. And so in 1870, they thought, well, we'll look forward to another 20 years of boom. Little did they realize that all of the money that was flowing around the world was creating a mania and a series of manias. The first was in Germany, where the stock market rose by 300% over the next 3 years and created sort of a bubble. The second was in New York, in the US, where railroads, which had been proceeding, were constructed at 3,000-4,000 miles a year, suddenly shot up to 7,000 miles a year. 500 new railroad companies were created in the next 3 years. On the London Stock Exchange, lots of new countries that had never been able to borrow on the capital market began borrowing, and the London Stock Exchange became something like of a casino. So you had these three bubbles created over the next 3 years, and they all collapsed to the same year in 1873.
And what caused the collapse? Why did the bubbles burst?
Bubbles tend to burst because investors overdo things. But the first thing was the Vienna Stock Exchange, which was related to the German Stock Exchange, had also risen by 300%. And suddenly investors realized that they were investing in lots of companies that were making no money and that had no prospect of ever making money, and started bailing out in March, April of 1873. That was followed in September of 1873 when Jay Cook, who was the premier investment banker in the U.S., suddenly was unable to. He was trying to create a second transcontinental railroad, and he'd raised about a third of the money that he needed. He needed $100 million, and he came to Europe and tried to raise money, but because of financial turmoil in Europe, he was unable to raise it, and he started injecting his own bank's capital into the railroad, a little bit like Lehman Brothers started injecting its own capital into the real estate boom of 2008, and we know what happened to Lehman Brothers. So in 1873, Jay Cook announces, I cannot raise the money. Now, he was the premier investment banker in the US, a friend of the president, a man who'd raised $2 billion for the US during the Civil War. And the fact that he couldn't raise money just spooked everyone. They said, look, if Jay Cook can't raise the money, what hope is there that we will raise the money? So in the process, all the 500 railroad companies in the U.S. By the end of the year, 100 had defaulted on their debts.
Gosh, so that industry collapsed effectively.
Essentially, and it collapsed for about 3 or 4 years, but it was the if you like, the AI of the age.
Interesting. We'll maybe pick up on AI a little bit later on. But as we're into this story, I'm keen to know more. The US bore the brunt, didn't they, initially of this crash? And then it became international. How did it become an international story? How did it originate in the US and then spread?
Okay, it became international because of Germany. Uh, Germany had just defeated France in the Franco-Prussian War in 1871 and had unified. And Bismarck was a geopolitical genius, but not so much a financial genius. And he decides that he is going to hit France while it's down and converts all his silver into gold. Now, this sounds like a very esoteric thing, but France held the largest stock of silver reserves in the world and acted as a balancing mechanism, keeping the price of gold and silver stable throughout the 19th century. And the consequences were that prices were largely stable throughout the 19th century until 1873. Bismarck decides that he's going to attack the French silver reserves. That spooks every bank in Europe, which sells all its silver. Silver prices collapse. France is then forced to abandon its link to silver, and in the process, uh, credit credit becomes tighter throughout because no one wants to hold silver. All the banks there's a swarm into gold, and that might have been okay under normal circumstances, but as we discovered in 2008, the last thing you want in the middle of a financial crisis, as all these bubbles are bursting and everyone's looking for cash, for a contraction in credit, and that's what happened. And that
Otto van,
caused
go on.
and
Sorry.
it caused a 20-year fall in commodity prices. Um, yeah,
Otto von Bismarck was known as the Iron Chancellor, wasn't he, in Germany? And I had a little chuckle to myself about that, because the Iron Chancellor causing the silver markets to completely crash. But there was a geopolitical advantage to be had as well throughout this crisis, wasn't there?
yeah. And look, it was actually, though, a self-inflicted wound, because silver prices collapsing and commodity prices collapsing hurt Bismarck's main constituency, which was the Prussian aristocracy. They suddenly found, themselves impoverished because they were major they were major estate holders, and they had large estates in Prussia, and they were known as the Junkers, and they were a very conservative group in Germany. And as silver prices collapsed and agricultural prices collapsed, Bismarck abandoned his alliance with the liberals, who were, who believed in free trade and open markets, and linked up with his old constituency, the Junkers, who then forced him to establish a rise in protection, and you got a wave of protectionism across Europe. I mean, it's somewhat reminiscent of today, where everyone's been putting up tariffs against each other.
Explain how the Wizard of Oz, this is a little known fact, you talk about it in the book, how the Wizard of Oz ties into this story.
Well, it caused this debate about gold versus silver created a massive political schism in the US, because the eastern half of the country was all in favor of gold, because that's where bondholders lived and that's where bankers lived. And the western half of the country was farmers, silver miners, and it split the Republican Party. The Wizard of Oz is an allegory for this split between gold and silver. I mean, I forget quite who all of the characters were, but I remember that the lion is uh, actually, I'm not going to even try and remember, but it's an allegory for all of the political conflict.
Yes.
And it was written in the 1890s, when the US went through a wave of populism.
Yeah, and it just shows, how culturally this crash, some call it the panic, and the subsequent depression, how it affected culture as well. The lion, by the way, is supposed to represent William Jennings Bryan, the
Oh,
prominent
yes, that's
populist
it.
and
Yeah,
democratic
sorry.
politician. He advocated for the free coinage of silver. I mean, Dorothy's slippers, we know them as ruby slippers, but in the original book, they are silver. The
Right,
yellow brick road represents the strict gold standard,
right,
which the author paints as sort of a kind of a false or dangerous path to prosperity. There are loads of great parallels there. The
right.
wizard, the politicians and bankers of the era. That is fascinating. Talk to me about the Roths. Start that again. Tell me about the Rothschilds. They were the richest family in the world in 1873. So they are involved in this story.
They are. I mean, they're in part, they provide just great copy, because they're the richest family in the world. They own 41 grand mansions across Europe, mostly in the UK and France, though they owned 4 mansions in Vienna. And they had become the richest family in the world by, by creating the bond market. And the bond market was the vehicle by which in middle class and upper middle class, I would more than middle class, high net worth British and French savers were able to uh, were able to lend to the rest of the world. The dilemma was that much of that lending was to was for crazy schemes. So, one of the biggest borrowers was the Ottoman Sultan Abdulaziz, who began to display, by about 1873, had begun to display signs of insanity. He insisted that all his court documents be written in red ink. He feared that someone would poison him, so he would only eat boiled eggs. And he became fascinated with sort of esoteric Ottoman sports like camel wrestling. So he was not a safe pair of hands.
Mm.
He had borrowed $1 billion in the bond market, and by 1873, he was finding it increasingly difficult to pay the interest on those bonds because they accounted for 60% of his budget, and another 20% went into his palaces and his harems. So he was an example of the extremes of the sort of extreme borrowers that ended up defaulting in the crisis.
Mm. Um, how did I'll start that again. How did the West, how did the various power brokers involved in this find a way out of what happened in 1873 and thereafter?
I mean, eventually they were bailed out because the world, because commodity prices kept declining. And in the early 1890s, two prospectors in South Africa on the Witwatersrand stumbled across one of them kicked a boulder and then suddenly looked at it and said, God, this is gold. And there was a massive gold rush in South Africa, which then caused commodity prices to rise. So that was what ultimately saved the West. But during those 20 years, it's hard to say the statesmen saved the West. They essentially started squabbling among themselves. So France put up tariffs against Italy. It banned all trade against Switzerland. The U.S., which had traditionally been protectionist, raised tariffs even higher, so that by the 1890s, tariff rates in the U.S. were 50%. So the world went through a sort of phase of deglobalization after a 20-year period of,
Turning inwards,
yes.
of which there are parallels today. Just sort of picking up on debt loads. The UK and many other countries are borrowing an awful lot of money. And whether you think we're at the point where our borrowing is dangerous enough, or maybe this is relevant to particular economies or countries, where the borrowing has reached an extent where you might trigger the next Great Depression. Are you concerned at all about the way economies work?
I am concerned, but less about the borrowing and more about the level of the stock market. I mean, in 1873, the big problem was the overhang of debt. And debt had become way too large and prices started declining. But the stock market then was the British stock market, which was the largest in the world, was a little less than 100% of GDP. The US stock market was maybe 30% of GDP. So these weren't large numbers. Today, the US stock market is $80 trillion in an economy of $30 trillion,
Wow.
250% of the value of GDP. And any stumble, and the stock market, by all measures, is extremely expensive. And it wouldn't take much to cause it to stumble. And foreigners own a ton of US securities. I think we had inflows of $1.5 trillion by foreigners into the US stock market. We've just had the largest IPO in history with SpaceX, which is worth $1.5 trillion and earns no money. So there are all the signs of the latter stages of a mania. So each time is different, and each time is driven by
Mm.
different excesses. And
And
I'm less worried about the public debt and more about the
yeah.
stock market.
Yeah. And just to break that down simply, you're painting a picture that with the likes of SpaceX and Elon Musk's empire being valued at $1.5 trillion, that doesn't put any money back into the economy. It's just a valuation, effectively. So that is pie in the sky. It doesn't contribute to the working economy.
Yeah, and it's all built on it's
On a
all
paper
built on hope.
valuation.
Yeah, and
Yeah,
on
yeah,
hope. I mean, it
yeah.
doesn't earn any money, and so all it would take to if that hope were suddenly to get shattered by something, it would the stock market would crumble.
And what about, we talked about bubbles earlier, and the three bubbles leading up to 1873. What about the AI bubble? Do you believe that it is a bubble, first of all? What similarities can we draw?
Well, it's certainly a boom, but uh, I suppose the way to think about it is if you take the railroads in the US, the amount of money that was going into railroad construction is about the same as the amount that's going into the construction of data centers and all of the infrastructure behind AI. Um, if that were to stumble, or even to take a pause, if people were to suddenly say, so what happened in the railroad case of the railroads is 500 new railroads were created, and by the end of 1872, only 100 were able to pay dividends, and their profitability started declining, and they were all competing against each other.
Mm,
So the it railroad construction came to a giant halt. Now, that wasn't the end of the railroads. It came to a halt for 5 years. You then got a second boom in the 1880s. That also collapsed. And then you got a third boom in the 1890s. So AI may be a fantastic new technology, but the financial implications, it's not going to make money in a straight line.
yeah,
We
yeah.
could
Again, it
easily,
can't be built on hope again, can it? It has to. It
exactly.
has to have real life consequences. That there have to be improvements to productivity. The economy has to boom because of the real material value of AI within the workplace, within our economy, etc. And I think we're still testing that, really, aren't we, to some extent?
Well, and we saw that with the dot-com bubble in 2000, that the internet was a great thing, but not without some pain. before, lots of flaky companies went under in 2000 and 2001. It revived. So Amazon went down 90% in 2000. It's now a giant company, but there were lots of other companies that disappeared in the mess.
Look, it's been a pleasure to speak to you. Thank you so much for being with us. Liaquat Ahamed, your new book is 1873, The First Great Depression and the Making of the Modern World. And as you can tell from our conversation, not only is it a fascinating story from history, there are many parallels to draw right up to the current day as well, and the way we think about the future too, of course. Liaquat, it's been a pleasure to speak to you. Thank you.
Great. Thank you, Kate.